Gonna get the Wi-Fi and stuff up and rolling, so. It is 6:59.
Yes, you did. Good timing.
All right, that's 7 o'clock. We're gonna start the meeting.
Starting findings.
Council, are you ready, Lori? All right. All right, 7 o'clock. I'll call the special meeting of council Tuesday, April 25th, 2023 to order. Council having so requested and with the concurrence of Mayor Harris, a special meeting of the council of the town of Crossfield is hereby called and convened by Mayor Harris as per section 194, 3 of the Municipal Government Act. We would like to take this opportunity to acknowledge the traditional territories of the Indigenous peoples of the Treaty 7 region and the Métis Nation of Alberta, Region 3. We respect the histories, languages, and cultures of the First Nations, Métis, Inuit, and all First Peoples of Canada, whose presence continues to enrich our community. Okay. Are there any changes or additions to the agenda? Okay, if not, can I get a motion to approve the agenda?
Through the chair, I'll make the motion to accept the agenda for April 25th, 2023.
All in favor?
Aye.
Motion carried. Okay, item 3.1, 2022 audited financial statements. Sue, do you want to, Amber, would you like to do introductions?
Yeah, absolutely. I'd like to welcome representatives from BDO Canada LLP, our audit team. We have Lorraine Walker and Alan Leister here to present. I hope I didn't butcher your last name too.
Lister.
Lister. Okay, sorry. To present the financials and their findings report.
Excellent. Thank you. Welcome.
Thanks. So we'll start with the findings report. I sometimes don't know which to start with because kind of a chicken and egg thing, but the findings report basically goes over the conclusions on our significant risk areas and things like that, as well as discusses the audit process in general. And then Alan will go through the financial statements in some detail at a higher level. And then we'll pause throughout for questions or at the end, whichever you prefer. But if you need to interrupt us to ask anything specific, please do so. So the first page, I just want to say before I forget to say that our very first meeting, there was a lot of things that were up in the air and some reconciliations, et cetera, that had to be done. And both Amber and Sue have just dug right in, got through everything. They did an incredible job because we had actually stated, if you recall, that we would like you to go and get an extension in case it was needed. We honestly didn't think at first we might be sitting here on today's date. So this is a huge accomplishment and it's because of your team.
Can we just back up just a little bit? And I don't know, Amber or Sue, if you can just talk a little bit about some of the background and what got us here and why we took such a deep dive into our audit this year.
Well, I guess I can do it because I was here before I was. As council's aware, at the end of 2021, when I started into 2022, it very quickly, within the first 3 or 4 months, became apparent that our previous administrative team, and I'll put some of the responsibility on the CAO, but our financial officer for sure, was way behind with reconciliations, was way behind with journal entries, so much so that in the audit last year, it was identified that it was substantive and it was a concern. And I had asked the auditors at that time to put it in because that's something council should always be aware of. So as we went through the auditing or the financials during the first part of the year, it quickly also became apparent that our banking was abysmal in terms of the account set up, reserves versus restricted reserves versus unrestricted reserve, as well as we didn't have the proper accounting system set up at ATB. So that was rectified quite quickly. We kept council apprised all the way through. I think as we went through, we also discovered that there was approximately $500,000 missing from our offsite levies and our capital reserve. And the other big thing I mentioned to council at that time in 2021 was that the $5 million loan that was borrowed from the town of Crossfield for the Main Street project, the Railway Street project, was taken in one big lump sum instead of drawn on as needed. And that 5 million was just dumped into the operating account, and it wasn't accounted for very well. So through that digging, and then when Amber got on July, I give the girl a lot of credit, man, because she had 8 months of reconciliation and journal entries to go through, reconcile. It was a huge job. I think there was times she looked at me and said, "Oh my God, why did I come to Crossfield?" But she's been brilliant. She's done a great job this last part of the year and for the last part of 2022 and into 2023. And we've had a really good rapport with this new team of auditors too. There's been a lot of good communication, and that speaks volumes because previously in 2021, when I was dealing with the auditors, there was a lot of things that were missed, in my opinion, and council wasn't privy to them. And so we're hoping, and we know we've got a couple of things that we need processes to put in place to tighten up just a little bit from our end, which we will do. We're in the process of doing that, but I think overall, I think we score a 9.5 out of 10.
Excellent. Thanks for everybody's hard work. We're now building a good foundation for Crossfield, so that's appreciated. So,
Okay.
sorry, continue, please.
So we'll go on to the audit at a glance, the next page. Just so you're aware, we met with you previously to discuss our planning report. And in that meeting, we had indicated that our preliminary materiality, which was based on draft numbers, was $230,000. Due to adjustments that were given, our final materiality was down to $195,000.
And if you can just go over materiality, not only for, some of the council, but for the public and what that means.
Sure. So basically, we set a materiality base, and Ellen, you can jump in here too. We set a materiality base, what we feel a user of the financial statements may find something significant. So that $195,000, though, is an overarching number. It's based on 2% of revenues, of adjusted revenues, which is a common materiality base for similar towns and organizations. We set that amount, but then we also set what is called a performance materiality. So it's a lower number, anywhere from 75 to 90%, and then a truly trivial amount, which is typically 5% of that materiality. So it's not that we're only looking at things that are $195,000 incorrect. You will see when we come to the summary of adjusted differences that the amounts on there overall end up being trivial, but we put them on there anyway because of making people aware that there are those slight differences, and most of them are cutoff differences. So they rectified themselves right after year end. Do you want to add anything to that?
No, I did a great job.
Thank you.
I guess the only thing I add is that materiality is kind of a tool that we use to be efficient in our audit, essentially, right? So it's a useful thing for us as well as the users, right? And I always say how I describe it is like have a set of statements that's $195,000 higher than this statement, and you make a different decision based on that, then it's material. If you don't, then it's not. That's how I go.
Yeah, that's a good way to put it. And certain things, materiality matters more than others. So for example, legal fees, when we're doing our testing on that, we look at 100%. We don't necessarily say we're only going to look at everything below our performance material, above performance materiality or something like that, because there could be other things that come out of a search on legal fees that become significant, like commitments, contingencies, and stuff like that.
The qualitative side of things, for sure. And I don't know if you said this, it's aggregate too, right? So we're adding things up to and typically once you get to 75% of that materiality, we're going to start looking at adjusting.
Yeah. So status of the audit is the next slide. So we're substantially complete we've already had a preliminary meeting with management to go over drafts. What we need to do after we have council approval today is we will get management to sign the representation letter, a copy of which is in this package. Approval, like I just said, approval of these financial statements by council. And then we will do our subsequent events review up to today's date. So we will have to go back to management and get anything that happened subsequent to the fiscal year end or subsequent to when our field work completed and update that to make sure nothing else needs to be disclosed in the financials. Any questions on that? Now I'm going to get into the findings on our significant risk areas. We discussed the findings only over the significant risk areas. That does not mean that we didn't have other enhanced risk areas in the file that we looked at throughout the audit. These are not the only two items we focused on. So the first is revenue recognition. In all organization, there is fraud risk over the recognition of revenue, in that manipulation of it could change the results of an organization. So our findings were that during the year, the town reported revenue of 8.7 million. The majority of this consisted of tax revenue, 3.4 was in user fee revenue, and 367 in grant revenue. The town represented that the services have been performed and that reasonable assurance exists regarding measurement and collectability of the consideration received. So we conducted testing over the revenues to ensure that all recognition criteria were met and were appropriate in the circumstances, and no issues were noted. Management override of controls. There is always a fraud risk over management's ability to override controls because of the unique position they're in to override accounting systems. Management represented to us that the risk of fraud in the entity is considered low. However, they have become aware of a discrepancy in certain computer equipment received in the past, which differs from the computer equipment that the town was previously billed for. So there is an ongoing investigation into this matter. We also conducted testing over journal entries to ensure they were appropriate in the circumstances. We reviewed any significant estimates to make sure there was no bias towards changing financial results. We reviewed your council minutes to make sure there was no disagreements between management and yourselves under financial reporting, and that no fraud indicators were reported and no additional issues were identified. Any questions there? Internal control matters. The only internal control matters that I would report in this findings report are significant deficiencies, of which, after all the work that was done by your team, we did not note any. We have issued through discussions a letter, but the 2 points on that were: one, for more formalized review of the monthly accounting package by the CAO and discussions that are documented. And the other is to have a formal process in place for restricting any amount. And they've already been working on those processes, so they don't form part of this report. Adjusted and unadjusted differences. So the next couple of slides go through the adjustments. The first one is the unadjusted differences. And you'll see that the largest one, did I skip a page? No, we're there. Yep. The biggest one is a bad debt expense on property tax that is overdue, which you're fully aware of. We put it there to be ultra conservative because you do have the rights against the property and the fair market value thereof. The other ones are to remove some assets that are no longer in use in the fiscal year. And then to record some vacation and sick day accruals, which it's a timing difference. So we did not propose to adjust these. Management agreed that they do not need to be adjusted. And I need to know if council is good with them not being adjusted.
I just have a question on that. Did we adjust that so no sick days could move forward?
In 2023 for this year.
That's right.
Each employee is now getting 12 sick days in total, which they can't carry over because of short-term disability in place.
That's right, but
Correct.
these numbers are from the prior to that.
Right.
Okay,
Correct. Question? No? So on to the adjusting entries. Now, it looks like there's several. Keep in mind, though, that we actually only proposed one. The rest of these adjustments came from Amber through her due diligence as she worked through the process of cutting off the year end. So the only adjusting entry that we actually had was to move the debt principal repayments. That's it.
and what does that mean?
We just moved them out of debentures principal into the accumulated surplus in order that they be recognized appropriately from the past.
Okay, great,
Okay.
thank you.
The rest of these are from Amber.
Yeah.
Other required communications. So bear with me, I have to go through these in a bit of detail so that I can sign off under my procedures. Potential effect on the financial statements of any material risks and exposures such as pending litigation required to be disclosed in the financial statements. When we get there, you'll see everything that is required to be disclosed is disclosed. We updated our legal confirmations with your legal counsel, and there have been no changes since our original confirmation. Material uncertainties related to events and conditions that may cast significant doubt on your ability to continue as a going concern. Nothing was noted. Disagreement with management about matters that individually or in the aggregate would have caused a significant change in these financial statements or our audit report, nothing. Matters involving non-compliance with laws and regulations, nothing noted. Significant related party transactions not in the normal course of operations and which involve significant judgment, nothing noted. Consultation with other accountants regarding significant auditing and accounting matters. We're not aware of any such consultations, and I have nothing else in this matter to report. I won't go through the next slide in detail because Ellen went through it in the planning meeting that we had with you, but it basically just describes our audit process. Updates on the audit process. This is just talking about the new auditing standard that affected your audit for the current year, which is Canadian Accounting Standard 315, which means that we actually had to do a deeper dive into systems controls to assess risks. And that was done. Then it talks about our approach, our audit suite that we use, which is proprietary to BDO globally, our portal, which we use to get information and which is secure, and then a couple of spotlights on sustainability, et cetera, that you can look at on your own. The next shows our audit report, which the most important thing is it's a clean audit report, which will be signed dated today, pending your approval. The representation letter, we will get management to sign. High level, this representation letter basically states that everything that we needed to complete our audit was provided to us and that nothing came to the attention of management or those charged with governance, which would be this council, that would cause us to have to update anything in our file. It would be very similar to the one that was signed last year. Independence update. That just says that we are independent and that we have no fiduciary or proprietary regard over the council or the town. And then the very last is just, I put in here for you to read through. There's a new standard coming out under PSAS in regards to asset retirement obligations. This is the standard overview of it. That's one of BDO's publications. And we will be working with management as early in the year as possible to make sure that this standard is appropriately implemented for the town. Any questions on that findings report overall? Okay. Your turn.
My turn. All right. For the financial. All right. Are you in control of this? Or who's in-
I'm not in control.
Oh,
Amber is.
I told her to get through our firewalls. We'd be here until the
Yeah,
next house
really.
was voted in. But
So, yeah, it's always the problem for that. I guess can't be too secure though, right?
Nope.
So the first page here is the auditor's report itself. Lorraine's kind of gone through that already again, just to confirm that it's a clean opinion. These statements are in accordance with public sector accounting standards, so that's great news based on all the hard work the team's done, so. And this is the report that we provide and we attach to the financial statements. The rest is the financial statements, and this is the responsibility of council and management. We just report on. So start with the statement of financial position itself. I'm gonna just go through these things. You guys, if you have questions on specific areas, just jump in, ask them. I'm just doing very high level type of stuff, but if there's something more detail you want to go into, certainly let me know. So the statement of financial position. So this is essentially your balance sheet. This is a point in time as of December 31st. So how this statement is arranged, it's arranged in a couple buckets or 3 buckets: financial assets, tangible or non-financial assets, and then accumulated surplus. So financial assets are just like they talked about. That are all their, you basically your cash, your receivables, things of that nature that they're liquid essentially, and will turn over fairly quickly or turn into cash or have to pay cash essentially. The one thing that comes out of that is net debt. And you can have a net asset or a net debt position. So what that means is your financial assets minus your financial liabilities are in a negative of $2.8 million. But what that means is that it's you essentially have more liabilities than you do have assets. But what you got to recognize here a little bit is it's not a long-term, short-term balance sheet. So basically you've got things like your long-term debt, your deferred revenue. Those things are not necessarily current as of today, right? So those are basically a longer-term type of liability. So therefore that doesn't take into account as far as those things go. But you can also see that the net debt went from 4.1 up to 2.8. So it's a good positive transition. The next part is the tangible capital assets. That's what you're investing, basically all the buildings, land, things like that, the tangible stuff. It is with that and your prepaid expenses were 53.6 million this year versus 54 last year. It went down a bit, so you're going to have your additions that come in and then your amortization that goes out. So you take those minus your net debt minus or plus your tangible assets to come to your accumulated surplus. Your accumulated surplus is 50.8 million versus 49 last year, so it grew that much. Now I'm going to talk about this guy a little bit because that seems like a big number, right? Any questions on the balance sheet or statement of financial position? No? Let's flip over to the statement of operations. So this is your period of time, so January to December. So basically what I kind of look at is you obviously got your 2001, 2000, there's 2021 and 2022, and then we could compare to budget. So if you look at your revenue in total, it was 8.6, almost 8.7 the current year. You actually beat budget, which was 8 million for the year. One of the bigger areas is user fees, which are typically harder to budget. So typically you'll see a kind of a conservative, more of a conservative budget. So that's all based on usage. So we outdid that one this year. That's great. The next one is expenditures. We're 9.1 this year. And budget was 9.162. So we're super close there, right? So basically very accurate on the budgeting side of it. And I'll talk about expenses a little bit here too, because what you're seeing is a deficiency of revenue over expenditures, both in actual of 483,000 and budget of 1.3, right? Which I'll explain in a bit here. We add in, so that's the operating side, then we add in kind of the capital, right? So what you've got is your government transfers for the current year for capital purposes of almost $1.1 million, plus your development agreements and levies of 308,000. So when you add that to that deficiency of 483, you actually get a positive 881,000. Per budget, you're 591,000. Right? So we add that to our surplus of 49, almost 50 million. Now we get to 50.8 million for the current year. So the budget itself, just to chat about it a little bit, I'm going to flip a little bit here. All the way to the bottom.
Yeah, it's way back.
Sorry. I lost a page. My
No.
financial statements.
It's page 20.
24.
You have it? If not, you can look here.
Oh, there it is. Sorry, right at the top. So basically, this budget note, so municipalities are supposed to budget for amortization. Typically, they don't, right? Amortization is essentially you buying your asset, and that's the cash outlay, and then deducting it over time. That's the amortization of the non-cash part of it. What we're required to do is basically say, okay, well, what was your budget? Reconcile to what it is actually showing on the financial statement. That's what this note is doing. And essentially what's happening is we'll take your budget, what you did for the current year. You guys recognize that based on the presentation that you had. We're basically looking at less amortization adding amortization and minus on capital expenditure. Because in the operating side, capital expenditures aren't a deduction, but amortization is, right? And the other component there is your reserves are not an expenditure or a revenue. They're just a way to fund the excess deficiency over expenses. That makes sense to everybody? Essentially what I'm saying is that you still have the budget you originally had, and that's the one you approved, and this one reconciles it to what the financial statements are. Make sense? Sort of, clear as mud. So as just to flip back to page 4, statement of operations. Is there any questions on that? And you'll see on there again, you'll see that 591,000 from that note carrying forward. And another reason why we kind of add amortization, you're supposed to have it there in the expenditures, is that when we're comparing budget to actual and you have amortization in both spots, you're comparing apples to apples then, so you can kind of see the difference. Any questions there? The next one is the net assets or net debt in this case. That's the one schedule that basically, as I said, it's a continuity essentially of trying to figure out where all those changes in that net debt came from. So we always start with that excess of revenue or expenditures. Again, adding or minusing off the actual capital expenditures, which are the cash part, adding back the amortization, is the non-cash part. And then you got your proceeds of disposition and your loss on capital assets. And then a bit of change in your prepaid expenses. So you can kind of see how the transition of that net debt happens from one year to the next. Another one is the cash flow is the next page. So the cash basically changed from the increase this year by 562,000. Basically, what this statement shows is essentially that change in, right? So you take that operating income of 881, again, adding in the non-cash side of things of 1.8, the net loss for accounting purposes of 180,000. And then these are all your different transitions of your accounts, or your balance sheet account, essentially, right? Then you're minusing off your capital expenditures of 1.5, and the changes, or sorry, your proceeds on the actual assets that you sold of 15,000, and then the repayment of debt, 478,000. So, okay, so the increase is 562, and then you get your cash equivalents from last year to get your $5.2 million. Any questions on that? No? So this, I talked about that surplus account, right? So we'll go to the next page there. This is the change in accumulated surplus. Now, I like this schedule because it basically shows us sort of 3 buckets that you're dealing with, right? So, you know, as ratepayers are coming, well, you got $50.8 million of accumulated surplus. Well, that 50 million is divided up into these 3 spots. $46 million of that surplus is like allocated to tangible capital assets that run basically municipality and all the rest of it. 2.9 of that is set aside for future expenditure, right? And then finally, the 1.9 out of that $50.1 million is actually for operation, right? And so that 1.9 is where, you know, you're going to set policies to put that aside to that restricted reserve, right? So you take it out of your unrestricted, put it into your restricted reserves for future expenditures, right? So that unrestricted should be essentially be what you need to run on an ongoing basis. Any questions on that? Okay, a couple more here. We'll just go to cash, page 11. The cash note itself. So you got $5.2 million of cash. But what you got to recognize there too, as well, is there's a restricted amounts in there. So there's a couple spots. Deferred revenue is essentially money that you guys have received but haven't spent yet, about $1.3 million. That is restricted. So you do have the cash in the bank, but you can't spend it because you've got it earmarked for other things, essentially, right? And the other one that we've got labeled here is $139,000 for deposit, right? Does that make sense? Essentially, there you do have 5.2, but you got to understand some of that is restricted for certain purposes, essentially, right? I think that was the last one that I want to. Oh, the deferred revenue was the other one. Yes. So deferred revenue, page 13, note 6. That one there again is essentially money that you've received, you haven't spent yet. This just sort of outlined where it essentially is earmarked for. So if you have somebody that was asking about deferred revenue, where it's going, these are the things that it's. Okay, and I'll add one more. There's been no questions yet. So page 18, note 12. Accumulated surplus, again, those 3 buckets I talked about. What I would like you to kind of look at is that restricted surplus part. These are kind of where those funds are earmarked for. So it's just kind of describing, what you put that money aside for. That's all I've got on the financials as far as what I want to kind of go through. Now it's up to you guys. Questions?
Questions, Mike? No, you're good? No. Good statement. All right, good job.
I don't know if we talked about.
Oh, sorry, Counselor Brennan has a question.
I actually had one
Oh,
question.
sorry, yeah, go ahead.
It's not really related to what you were just speaking on, but I did read through the retirement obligations, asset retirement obligations, and if you could help me just understand it a little bit more, or I don't even know if it's pertinent to right now, like if it's necessary.
Well, that's a great question because it's coming around next
Yep.
year. I don't know,
Yeah.
Lorraine, if you want to kind of go through it or.
So effectively what it is that you have to set up where there's asbestos or other types of items like that are onerous in disposition. You have to basically, in a nutshell, estimate what your future liability will be to retire those assets.
Okay,
So, and then we do a calculation and we bring that in over time. So that's where the work has to be done. Is first we have to identify which assets you have that have potential asset retirement obligations. And then we have to try to figure out what that liability looks like and how to measure it.
okay. So on
The
that,
big one is where there's asbestos in buildings, like just
Yeah.
just to
As
say,
you're looking around.
yeah. This building's pretty new, right?
just don't take deep breaths.
Yeah. So that's the big one. That's what
Yeah.
a
Right.
lot of school boards are looking at for the various schools. A lot of municipalities are looking at for old buildings in the area.
Mm.
Yeah.
There's on that as well, if the standards come out of years. No different today.
So it's as far as the calculation goes, you mean? Well, the starting point is like Lorraine said, identification. You know, and typically what you end up doing is you identify that you're gonna have to rely on some experts here to
Mhm.
do what phase 1, phase 2 type of things to give us an idea what those costs might be. From there, now you got to figure out, okay, well, when, are you going to have to replace or deal with it, right? So that's where kind of those variables come into play, right? So depending on the building, the age, your capital requirements, your capital plans, all those type of things are going to be coming into play as far as that calculation goes. So it's not a straightforward answer. It's essentially identification, and then we start looking at that kind of stuff, right?
Sue.
As council's aware, we started our asset management program last year, and this will play a big part in assisting us in moving forward with DH and upgrading and or demolishing of buildings and infrastructure. So we're well on our way. We're a little bit ahead of the curve.
No, I think you are, and that's good because our concern as auditors is not getting in front of places soon enough, because this would be just way too much to have to deal with.
In the
during
11th hour.
the year-end process. So that's why we will be having lots of conversations throughout the year on it.
And sort of the reasoning behind that we're seeing is that you'll see trying to go to a full disclosure type of thing, right? As you all know, I mean, there's all sorts of landfill liability calculations, sick leave benefits. This is just another step in that direction where they're saying, okay, well, as a community municipality, what is your full exposure, right? That's what they're trying to do.
Can't imagine.
Huh.
Oh, yeah.
They also have more resources than we do.
Yeah.
More.
But yeah, Lorraine's absolutely correct. It's something, we're talking to all the municipalities now, right? Saying, let's plan for this. How can we help you? Those type of things, because again, this is not something you can deal with during the audit process. So past that.
Okay.
So really all staff will have to start, well, they've already started, we'll have to be looking at things in a different lens moving forward, whether it's HR and where we're at, liabilities for long-term, short-term, any of that. Our fleet review, and then all of our capital and some operational considerations.
Excellent. Any more questions?
Appreciate it.
All right, thanks so much. And it was a long haul, but thanks for taking that deep dive and looking into everything and all your hard work.
Pleasure. Lorraine did all the hard work anyway.
That's
No, I think our team
better
did.
position.
Yeah.
That's what,
We had a really good team internally. His senior manager is just excellent. He understands this municipality's work inside and out, and Morgan, all of them, Roger.
like, honestly, before you came in, she was just telling us that she was doing all the work.
Well, of course, yeah.
We didn't put a formal submission in, but would ask council.
Yes, to
accept the
approve.
Audit.
Yes.
As presented.
Yeah.
I'll make the motion that we accept and sign the 2022 audited financial statements as presented.
Good job. All in favor?
All right.
Motion carried.
Thank you very much.
Thanks so much.
Okay,
Right.
thank you.
Have a safe drive.
We'll be in touch.
See you in a year.
To finalize.
Okay, item 4.1, 2023 operating budget. Amber.
Thank you, Mayor and Council. Just before I jump into this next item, I wanted to take a moment to thank Courtney Cox especially, as well as everyone else at the town of Crossfield that helped get us to the finish line. It was, it took a village for the town to pass that audit. So everyone deserves a little pat on the back for all the hard work. So yeah, thank you.
Good job.
Okay. 2023 operating budget. I'm not fully going to go through the report because well, I did last week, but I will jump in about halfway down the page on the fourth paragraph. The 2023 operating budget was brought to council on April 18th, at which time council identified expenditures that required further review and tabled the approval of the budget until after the presentation of the 2022 audited financial statements. Just as a reminder, a few of those adjustments were a reduction of the CAO discretionary budget, a reduction of the LED sign budget to reflect the fact that the accounts were closed recently in mid-April. A correction of the arena salaries actual. It was just a typographical error. So that was those were all made. So administration performed the operating expense adjustments as requested, which resulted in a revenue reduction of 0.1% under all three options. It was a very minor adjustment. Administration has also updated the presentation of the budget to reflect the property tax revenues associated with assessment growth or the new development in our community. The additional tax revenue from real assessment growth during the assessment year is $118,900, equivalent to a 3.01% tax increase. The inclusion of the property tax revenue associated with growth essentially decreases the required property tax increase for the base, I should say.
Should that be, is that 3.01 or 3.10?
The 118,900 is 3.01%. It's
So
equivalent
it's not
to,
the, okay.
based on 1% being equal to $39,505. An estimate of the property tax revenue attributed to growth will be incorporated in future operating budgets presented to council. So it won't be this will be your first time seeing it, but it won't be your last. The property tax revenue increases are now under option 1, a 0% property tax increase. Under option 2, 1.64% property tax increase, and under option 3 is a 3.10% property tax increase. So the difference in those numbers compared to what you saw last week is equal to the growth in property tax revenue due to the additional property tax revenue attributed to growth that didn't exist before, so it's new. All three options provide for a balanced operating budget. In addition to the review, council requested that the reintroduction of a business case for the development officer. The business case for the addition is enclosed. So at this time, I suppose I'll just stop and ask if there's any further questions on the budget, and if you want me to go through the cover the business case for the development officer once again.
Questions for Amber first?
Through the chair.
Councillor Gustafson.
It's just actually on the development officer. You've got 83, the number there. Now, would that include any of the hiring fees that would be associated with headhunter, anything like that?
We do have budget for position posting, not necessarily for a headhunter for this, but there is existing budget in the administration department for some of those hiring expenses.
Okay, good enough. That's all I needed.
My question on the permit officer is the 83,000. Did we benchmark that number and compare it to a permit officer or a development officer?
It's been benchmarked and it's a development officer. Part of that role is permitting. But it was comparable to other municipalities in the surrounding area.
And based on how many hours per week?
Same as what we work now, which is 35 hours a week. Plus, 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 plus.
Yeah, go ahead.
Through the chair, and by hiring this development officer, that will offset some of the external stuff that we have to tackle. That's correct, right?
Yeah, absolutely. That's identified
That's-
in the
and that's the
business
reason.
case that, you know, there would be less contracted services required if that resource was internal.
Okay, thank you.
Just so I'm clear, like this isn't a position just for anyone. We'd be looking for education and skills to match this.
Correct.
Yeah. Okay. Any other questions? Budget or otherwise? No. Good.
So if there are no further questions, administration recommends that council approve the 2023 operating budget as presented based on a property tax increase of 3.1%.
Okay. If there's no further discussion, can I get a motion on item 4.1? That council approves the budget.
Through the chair,
Thank you.
I'll make the motion that the 2023 operating budget be accepted as presented
Based on property tax increase.
based on property in tax increase of 3.1%.
Awesome. Discussion? No? Okay, all in favor?
Aye.
Motion carried. Excellent, thank you. Item 4.1, sorry. Item 5.1, rescind policy 2015-4 vacant residential property tax.
Thank you. Bylaw 2015-04 vacant residential property tax policy was introduced in 2015 to encourage development on vacant residential property. The policy includes exemptions based on use, such as parking stalls, as well as sets exempt time periods before the policy will apply to vacant residential properties. Policy also includes incentives and the ability for the taxpayer to apply for tax forgiveness on the vacant lands if development has been initiated. Some of the background of the incentives and exemptions built into the policy create challenges implementing the policy consistently. In the past, it has been applied in an inconsistent manner. And in developing the current tax bylaw, that's kind of where this administration became aware of that. In 2022, there was also a minimum tax payable clause added to the taxation bylaw. It is best practice to have all policies surrounding the implementation of property taxes incorporated into one policy document, the taxation bylaw. This creates efficiencies in administering property taxes and also reduces the number of documents the public must reference in researching the town's property tax regulations. For this reason, and in consideration of red tape reduction strategies, it is administration's recommendation that 2015-04 vacant residential property tax policy be rescinded.
Great, thanks, Amber. Does anybody have questions for Amber?
Through the
Yeah,
chair.
Councillor Gustafson.
I just a question on if you could elaborate on inconsistencies on how it was implemented when, what did we find on, was it? Maybe you can explain.
Yep, I found in some years it wasn't, tax mill rate wasn't applied at a 3 times rate. So it just wasn't applied. Basically, that's the
It wasn't
inconsistent.
applied across the board for the last several years,
Right.
and that's the issue with this policy.
Was there consistency on why it wasn't fairly applied, or is like, was there? Maybe
It's hard to-
I'm digging in too deep because
It was personnel. quite frankly, that's why I wasn't applied.
Right, we
Okay.
had a financial officer in place before that didn't know how to do her job.
Like we did great.
Right.
So part of the analysis in preparing this this item for your consideration, I looked at, I took 2023 and provided a case study on the vacant residential lots in the proper or town of Crossfield. So you'll see the highlighted, the 6 highlighted at the top of the list. They would be the only ones eligible for that 3 times the mill rate policy because they've been owned for longer than 2 years. There's a caveat in the policy that it has, I think in the 3rd year that you own a vacant lot, then this policy would apply. So those ones would be the ones that it applied to. So if you look at the bottom of this page in the second to the last column, if we applied the policy as it stands this year, we would generate about 6,723 additional tax dollars by charging 3 times the mill rate. Whereas in the rightmost column, you'll see that by applying the minimum property tax rate policy to the vacant residential lots, it'll generate approximately $8,600 more than if neither policy was applied. So there is a revenue incentive to apply that flat rate.
It's really, Amber, the intent of that policy was to get people to build after at least a three-year
think
term. But
so.
did we see any change in empty lots to builds on those empty lots?
Well, I think the list shows that we don't really have a problem with vacant residential lots in the town of Crossfield. There's, I personally haven't driven by the few that have been vacant for a long time to see what that property looks like. But I don't see, we don't really have an issue with,
Residential.
filling in, infill and stuff like that.
So what do we have to address commercial and industrial empty lots?
That is not covered in the policy in front of you right now.
Right. But it would be something that we may be looking into.
I know there are some tax policies such as, to encourage development as far as rebates and whatnot, to encourage economic development.
The best solution for industrial commercial is the tax incentive bylaw. And I think I've talked with council about this briefly before, where over the 3 years of the program, the first year it's 75% tax forgiveness, 50%, then 25%. But they have to develop. So that incentive is only if they're building something new, doing a major renovation.
Right. Okay, thank you.
Mhm.
Go ahead.
Through the chair, I just have a question about that. So would the rebate, would there be a rebate after the 3-year? Would that be incentive? Because then you've developed here, we'll rebate you this after the fact, or how would you?
It's implemented every year based on the assessed value of the property. And as soon as you start building on it, your assessed value goes up.
Yeah,
So
Mhm.
it's 75% based on the first year
Okay.
assessed value, then 50 on the second year and 25 on the third year. And it can be whatever number council wants, but that's typically what municipalities are doing to get commercial development, new commercial development going on empty lots.
Thank you. Any further questions for Amber? Excellent. No further questions or discussion. Can I get a motion to rescind policy 2015-04 vacant residential property tax policy?
Make the motion.
Councilor Brennan,
Through the chair. I move that 2015-04 vacant residential property tax policy be rescinded.
all in favor? Motion carried. Item 6.1. Bylaw 2023-10-12 2023 taxation bylaw. Amber.
Excellent. Well, I'm very happy to present this item to you, council, tonight. It's the 2023-10 taxation bylaw, and I'm looking for first and second reading tonight. Some of the background and rationale to developing this bylaw. Municipal tax rate. The Municipal Government Act authorizes a municipality to pass an annual property tax rate bylaw imposing a property tax sufficient to raise the necessary revenue to pay requisitions, expenditures, and transfers as set out in the approved budget. So thankfully, now we have an approved budget, so we can carry on with this agenda item. The 2023 rate includes a 3.1 general tax increase and a non-residential rate split increase to 1.0. The rate split is aligned with the annual budget policy approved on April 18th, 2023. The annual property tax bylaw sets out the assessed property values by class and calculates the tax rates required to raise budgeted tax revenue in accordance with property tax policies. The amount of the tax revenue required is established in the 2023 operating budget. Education requisitions. The 2023 education requisition has increased $42,307 from 1.896 million or 1.896 million this year, over 1.853 million last year. That's an increase of 2.28%. We may have heard that the education requisitions didn't go up, but just like with residential properties and assessment, if our assessment changes in a proportion different from the average, then those amounts still change, even though the total amount of maybe education tax hasn't increased, but our piece of the pie just shifts a little bit. So that increased 2.8%. The 2022 requisition increased 4.67% over the year before. The 2023 local rate has been reduced by the 2022 education tax over levy of $68,521. So that just means last year we over levied education tax by that amount. So this year we adjust the amount we tax for that over levy. The Rocky View Foundation requisition. The 2023 Rocky View Foundation operating requisition of $35,108.67 is $1,283.26 higher than the 2022 requisition, a 3.79 increase. The 2022 requisition increased 1.59% over the year before. The increase is to offset rising costs due to inflation. The 2023 mill rate has been reduced by the 2022 RVF over levy of $1,405.90. That's the exact same scenario as for the education requisition. The annual budget policy. The town does not tax overall market value appreciation or depreciation. However, individual market value changes will be different for each property with different impacts to their tax levies. On average, for the 12 months ending June 30th, 2022, because that's when our assessment year is cut off, non-residential properties experienced an increase in market value of 0.51% and residential increased 18.51%. So that shows that the non-res or the commercial and industrial assessment is quite flat. Whereas the residential has seen a significant increase in value. Taxable assessment growth. The taxable assessment on new development was $17,649,000 and change, comprised of $20,234,790 of residential growth. And there's actually negative growth in the amount of $2,585,000 in the non-residential assessment. If you have any questions on that, I do have an explanation from the assessor that I can go over if you choose to ask the question. I asked the question because it was kind of a lot.
Or you can just tell us.
Okay. Basically, what he said is that this is an issue with the way that the assessment system, it's called Camelot, calculates growth. There's been some, I think, housekeeping going on in the background to change codes. So some of that negative growth really just has to do with housekeeping.
Thank you.
I guess it wasn't a very exciting explanation.
It may be exciting for some.
Okay, property assessment. As established by provincial legislation, the annual property assessments have been prepared based on property sales between June 30th, 2021 and July 1st, 2022. Combined property taxation and assessment notices will be mailed on May 18th, 2023. Assessors and administration staff will be available by phone or in person to discuss current assessments, comparable assessments, and related concerns. There's a 60-day assessment complaint period by which every assessed property owner has a window to ask questions and appeal their assessment if they choose. Communication. The town advertises the combined property taxation and assessment notice mailing through the Rocky View Weekly, the town website, social media, and we'll be using town-owned billboards to advertise the tax due date and the mailing of the taxes. Combined property taxation and assessment notices will be mailed no later than May 18th and are due on June 30th, excluding those on pre-authorized payment plans. Their due date doesn't change. Financial implication, the 2023 municipal tax requirement is $4,192,135. And you'll find that number in your budget if the top line of your operating budget, if you choose to reference back. So after all of that, administration recommends council give first and second reading to 2023-10 taxation bylaw.
Thanks, Amber. Just a question on your communications. That will, is this where we include that one pager with the pie charts and everything else on there so people understand their taxes?
I think that last year there was a stuffer in with the property tax notice. That's an opportunity to include communication and build that up. Yeah.
Yeah, and so this year, as you know, like we really want to bump that up, like the professionalism there and the information and make it easy for our taxpayers to understand. Your presentation, I would take maybe from some of that, some of your pie charts. Where did our money go?
Yeah.
Why do we have a
Sure.
3.1% raise in tax rate?
Absolutely.
Just explain it fully to everyone so that they know.
Yep. I have some experience of preparing such documents, so I'm sure that we'll have no problem coming up with a made in Crossfield solution for that communication.
Excellent. Thanks, Amber. I appreciate that.
Yep.
Questions for Amber? Okay, I believe we will need two motions on this, first reading and second reading. So if I can get a motion for first reading. Go ahead.
I move the bylaw 2023-10-2023 taxation bylaw be given first reading.
All in favor?
Aye.
A motion carried. And second reading.
Through the chair,
Yeah, go ahead.
I'll move that the bylaw 2023-10, the 2023 taxation bylaw be given second reading.
All in favor?
Aye.
Motion carried. I think I just saw Lori get excited to the last motion for adjournment. Excellent. Thank you, Amber. Good presentation. You did well.
Yes.
All right, that's it. So can I get a motion to adjourn?
I'll make the motion to adjourn.
Excellent. Thank you.
Thank you, Sue. We are in such a better place than we were.
yes.